Welcome to the Common Sense Investing, or CSI Show, with Victor McClure and Guy Allard from McClure Capital Wealth Management Companies. For the next hour, Victor and Guy will use their combined 60-plus years of experience to answer your financial questions with their own brand of plain-spoken language and hard-hitting style.
Welcome to the Common Sense Investing Show. I'm Victor McClure.
And I'm Guy Allard. I like the way you said Victor and Guy. I wonder if, is that how Ben and Jerry started out?
That's right. Welcome back. It's, I guess it's spring now, isn't it?
It is. Welcome back. We had to run a rerun last week, which we apologize for, but it was a good one. Victor took the whole family to Taos. Went skiing, and you probably all heard about the snow bomb cyclone, 90-mile-an-hour winds, which we had, by the way, about 4:30 in the morning the next day, and you had to drive through that, didn't you?
Well, I've driven through blizzards and up in the, in
pouring down rain
everywhere.
Right?
Because I lived in New York, Chicago. I lived in California, and I remember
Through the
blizzard in Colorado. Yeah.
Right.
And I've never seen anything like it. It was 100-mile-an-hour winds through New Mexico and snow. And then when you get out of the snow part, it's still 100-mile-an-hour winds.
How fast were you going?
I was about 80, 83.
No, how fast were you going?
80, 83. The winds are going 100 sideways right at your side. And so, I had one of those.
You were driving 80 miles an hour in 100-mile-an-hour winds?
No, not the blizzard. The blizzard I couldn't. I was driving like 20 miles an hour.
Yeah, no, that's...
Once you get out of the snow and you can see, it's just wind. But it knocked every mile. You'll see a semi turned over.
Right.
I mean, just blew them right off the highway.
That's crazy.
It blew over off a train trestle like a bridge, blew it completely off. That's some strong wind that'll take a train off and the tracks.
How long did you have to drive before it subsided?
10 hours.
No.
It was all the way to Wichita Falls before it finally
Dang.
slowed down a little bit.
That's a long time.
Everywhere
Right?
you go, I was looking at, we're playing a game with all the kids, who could see the roofs blown off. It's everywhere. I've never seen anything like it. So.
Were they scared?
Yeah. But I have determined the age
of
when you should never ski again. There's a certain age you have to stop and never do it again.
Right.
That age is 55. For anybody out there thinking about it, it's 55. Don't do it past then.
And that's a good in shape 55-year-old. If you're not in shape, it's probably 45. Just saying.
So my wife, she's younger than me, and she was like, well, you just got to get your knees. I go, my knees, no matter how much I work out, don't go side to side like skiing, Yeah. And I'm telling you, it was the worst. I couldn't stand it. And I loved skiing.
Right.
Oh, but not now. I'm done.
You got those long boards. I mean, that's a lot of torque on the knees.
Oh, yeah. It came to the point where they started hurting. I just fall down. I just laid down. And I look like, you can't ski anymore at all. Like, what happened?
Maybe you need to go to a snowboard.
I don't know.
Like these kids do.
Yeah, I don't think so. I can't do anything else a kid can do, so. Well, I can't do that either. Well, let's see. The big news around Dallas lately is one of the radio hosts got arrested for scamming people out of $30 million, something like that.
Yeah, what a shame.
Holy moly. This particular one lost his license years ago and threatened to sue us, remember?
We mentioned it on the radio, both individually, and he had his attorney send us a letter. And, of course, when you lose your license, or at least in that instance, a lot of times the regulatory bodies, be it the SEC or FINRA wasn't around then, but FINRA and all of that, will give you the option
That's right.
of relinquishing your license, or they're going to pursue you. Yeah,
That's right.
Yeah.
So
he said, I relinquished my license.
Well, apparently he was still doing stuff.
Yeah.
And it was like $30 million, only bought like a $75,000 annuity and one other thing. And it's all I'm doing is reading the SEC report, the arrest report and all that.
So he raised about $30 million approximately. Uh-huh. He applied $75,000 of the $30 million to what it was supposed to, right? Mm-hmm. Does that remind you of anything? I'm thinking Clinton Foundation. Is it not the same thing?
It was like $6 million in expenses and
yeah.
Another
$3 million for the radio shows, and
like,
it's part of doing business.
Well, the reason why I wanted to start this show with how do you avoid being scammed? Remember, we've talked about if you could. This person's been a radio person, financial person, for many years in Dallas. First off, we said you got to make sure somebody's licensed.
Yep.
You're not a financial advisor if you have an insurance license. You're an insurance agent.
In fact, you're prohibited from talking about the
That's
security stock
Now,
side.
they do. there are radio people right now in Dallas that don't have an insurance license. There's nothing wrong with insurance people, insurance agents.
No,
Nothing
we
wrong
have that license
But
as well.
you shouldn't be talking about 401ks, stocks and bonds and mutual funds and whether bad or good or whatever unless you're licensed to do so and qualified to do so. Typically, like with that other particular person, I just don't feel like being on the lawsuit chain. The other particular person is, they said, well, they gave it up. Well, if you're giving financial advice, how do you give up your financial license?
Yep.
It doesn't make sense, right?
And the compliance and all that goes with it.
Oh, don't get me wrong. There's 4 government agencies to monitor everything we do, and it's a pain. It's a terrible pain. But you can't give financial advice when you're just an insurance agent.
No.
There's nothing wrong with being you can be the greatest insurance agent in the world. There's nothing wrong with that at all. It's just you're saying you're a financial advisor and you're doing everything else, but talking about their stocks, talking about this. There's nothing wrong. They can sell you an annuity, sell you a life insurance policy. Nothing wrong with that.
But they can't compare it to, they can't
Stocks,
remove you out of, do the financial plan. That probably would be a good idea.
They still do.
And the
I can
problem,
name 2 of them in Dallas right now on the radio that do it.
and they're always, and
not
the problem is the senior market is a real target because you've got some money, you've been able to save. And when you hear senior market, even me still at, turning 59 here soon, I think, oh, that's like 70 or 80. Well, no, it starts at 50. AARP is knocking down your door at 50 and you start getting the senior discount. So 50 plus is the market because you have money. My mom we talked about the Medicare scam, trying to get the apparatus for her back, which she had no problems. They forced on her and then charged her Medicare account thousands of dollars for this $20 cheap plastic brace. So the seniors are constantly under a barrage of attacks, and the finances are no different. You have to be careful. You have to be licensed, like Victor said.
It really does start at 50. When I got that AARP welcome letter to the club,
That's
and
right.
the Silver Care Insurance letter, I qualify for Silver Care Insurance.
Nice.
I sent them all back, of course, because there was obviously a mistake.
Yeah.
I'm not an old person, right?
No.
So send them all back.
That's right.
But, you got to be very careful. These people, they're unscrupulous. The one thing that bother me emotionally and physically almost jolt me is when people use affinity fraud. And this particular person just got arrested. That's all they did. I'll see you in church. We're going to heal you financially, then heal you spiritually. Everything's about, I happen to be a Christian. But I would never use that as a way to make people think I'm a good guy. So they'll send me money.
If they're talking about it when you're doing business, that's a real bad, that's a red
flag. Very
flag.
careful. And that's what they're saying. You can't, so at least they're off the street. Remember Madoff? He wasn't as blatant, but he got a lot of people, because he's Jewish, a lot of people, very wealthy Jewish people to invest with him. And, affinity fraud, they're not using faith to scam people out of money. There can't be anything lower than that.
That's right.
I can't imagine anything lower. But we'll talk about those. Just remember, there's a lot of, and I looked at all the different reports and studies, talks about scams.
Yep.
Every one of them had towards either 1, 2, or 3, top of the list, affinity scams, because they're so vicious. And it's like, I heard this, well, there's somebody at my church and blah, blah, blah. Be careful.
Here's an exact quote from the NASAA. And if you're not familiar with that acronym, it's the North American Securities Administration Association, which is the oldest international organization devoted to investor protection. And this is several years old, but the point's the same. It's ongoing, just the names change. It said securities regulators have opened 26 cases in the past year involving senior specialists, and that's in quote, in the eastern half of the United States alone. Most of the cases involve securities recommendations by individuals who are not properly licensed by state securities regulators. So again, that's the first place you start.
That's right. Don't get me wrong. You can still find a crook that's licensed. It's just harder.
Yeah, absolutely.
Because there's a lot more at stake.
Madoff.
Think about it. There's freedom of speech, right?
Yep.
Say anything you want. You're licensed. You can't.
You can't advertise everything.
He was advertising 5 to 8% with risk-free, no risk. Well, by the way, there's no such thing as no risk.
That's right.
There might be low risk or guarantees, but those guarantees have to be based on something.
Yep.
Low risk might be extremely low. There's no such thing as no risk, right? And so when they start saying that kind of stuff, I'll see you at church and we're going to help you get 5 to 8% risk-free. Well, there's no such thing. Without principal guarantee, that's fine to say, but you just got to be careful, because Anybody that would cheat you like that, you've got to worry. Just make sure they got all the securities license and everything else, because trust me, they'll put you under a jail if for a securities violation. Think about it. Martha Stewart, we know she lied about that one stock trade, right?
Right.
And she's almost a billionaire. So it was like throwing a penny on the floor for her. I mean, it was $100,000 or something.
Didn't change her life.
No. They gave her as much jail time as Mike Tyson, who raped somebody in a hotel room. Really? I go, so you got to be careful with that stuff. So that's what I'm saying. If you're a licensed person, you got to run on these rails pretty good, and that's for the protection of the people. Every customer needs to be protected, because you never know, these people are nuts out there. We got a break coming up, folks. But remember, we're going to answer your questions when we return from the break. If you have any questions or like to take advantage of our no cost, no obligation retirement plan, Social Security Optimizer, we can also show you a sequence of returns calculator that's the most interesting thing I've ever seen. Call us at 972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, where your investment strategy is always based on facts instead of some sales pitch. Here's Victor McClure and Guy Allard.
Welcome back to the show. We're just going to finish up a little bit on how not to get scammed or
what to watch out for.
Right. There's, there's different kinds of scams out there. There's like a soft scam, where it's something where they're just exaggerating or misrepresenting, genuine products or companies, or they're actually trying to sell a product but not really giving it to you, delivering it to you.
Yeah, and I don't want to throw you off base here too. There's a lot of things too that you may not be able to put in the scam category, but you've got an advisor that's just trying too hard for the commission or whatever, who isn't truly a fiduciary and doesn't have that mindset, and through omission. He knows the questions that you don't know to ask, but intentionally avoids that area and doesn't mention it. To me, that's very deceptive.
Oh, yeah. Well, you can cheat somebody by omission just as much as you can cheat them
by
what you're telling.
It's not a scam, but you know what you're doing.
But the number one, they have bad investment scams, affinity scams, remember?
Yep.
It's usually a church or organization you might belong to is what they'll target, because you have similar interest or whatever. A lot of them will target certain groups, and some of them, believe it or not, some of them believe the BS, some of them,
Yep.
And so the ones that believe it are the most dangerous, because the ones that believe it are going to be very convincing.
That's right.
And remember, there's identity theft. I've had my bank account broken into, I think, twice.
Our credit
different ones.
Cards a couple times in
Credit
the last
cards
year.
a couple times.
Yep.
It's like, well, why was I in Denver, Colorado yesterday? Buying a car.
That's right.
I don't think so. Why did I spend $2,300 at a gas station? What can you get at a gas station
I can't
for
imagine.
$2,300? It'd have to be one of them where they're giving them cash for, charge $2,300 on the car and I give you $1,500 cash. It's probably a scam for both.
He was standing out there. Hey, let me put your gas on my card.
I was like, how can you spend $2,000 at a gas station?
Yeah.
I'm like, all right. There's internet scams. You got to be careful, boy. These, I spot them all the time, but some of these emails you get are pretty good. It's not just the Nigerian,
Yeah, the obvious ones.
Yeah, the obvious one. These are like, that was a pretty good one. Hey, there's something wrong with your Explorer account. Click on here so we can run a bug fix on it. There's something and they'll have a Microsoft logo on it.
That's right.
Oh yeah. So you got to be careful. And a lot of times they'll have a number there. If you call the number, it's to them. They'll answer at Microsoft. You have to go find a Microsoft outside of that.
That's right.
They'll
It's
say,
like the old
no, it's a scam.
It's like the old PayPal scam. If you click on their link to PayPal, it's their site. But if you enter it on your own and type in PayPal.com, you get the authentic deal.
And the old thing is just like the one person we talked about earlier, the radio personality in Dallas for 30 or 40 years that just got arrested.
And gives the honest people a bad name.
Oh,
Thank
absolutely.
you.
The pyramid scheme or Ponzi scheme is done by a guy named, I think, Charles Ponzi.
Oh, it's named after him.
But basically, you take all this money in, and you're going to give them 5% interest.
That's what Madoff did.
Yeah, so the new people, you just pay part of that into them, right? It's just they're taking new money and paying interest. They didn't earn the interest. They don't have the investments. They're just taking new money to pay interest.
So think about it. If you had $10 million in, right, and you had to pay 5% interest, you have to pay $500,000 on that $10 million. Well, you raise another $10 million, You take $500,000 to pay the first $10 million in interest, right? Now you've got 20. Right. Now this year you have to give $1 million in interest to honor that 5%. So you raise another 10 and et cetera,
and that's
so
why
forth
it took
and so
so
on.
long to catch Madoff and to catch this Dallas radio personality, right?
He was pretty deep with the charts and the
it's fake statements, fake all this stuff, right?
Yeah.
Like we've been doing this for 30-something years each. You will never get a statement from McClure Capital. If we're at the managed account, it's Fidelity.
That's right.
The money's at Fidelity. We're an advisor. We're not supposed to hold your money, right? Or if it's with an annuity, it's with the insurance company. You're going to get a statement from the insurance company. It has nothing to do with the person. Now, they could have a combined statement where you get both.
That's right.
Like McClure Capital say, hey, here's all your different accounts. That's fine. But you have to get a statement from each one. If you only got a statement from a broker or a small firm or whatever, that's a huge red flag because that does not happen. Nobody has custody of their own money in this business unless they're crooked. I mean, it's really, really rare.
So we'll repeat
or
it
gigantic.
At the risk of being redundant. Number one, you have to make sure they're licensed in both the security side and the insurance side, right? So that their opinion is objective, not subjective. I had to think about that for a second. Right. And they can talk to you about both and provide the plans. Also, you want to make sure they have experience, right? You don't want them learning on your money.
That's right.
So you find someone that's been around for a while, and then after that, you go after credentials and such to validate.
I mean, I've heard both. I've heard an insurance person say, well, you don't need that securities license. That's Wall Street Casino. Who would do that? Like, well, a lot of people should do it. That's who. And the stock people saying this, oh, those annuities and life, that's crooks.
Yeah.
It's all BS.
And that's why you want someone with both, because the
right.
annuity people and the securities people are always fighting.
It's throwing rocks at each other
That's
all
right,
the time.
all the time.
But remember, if you're just going to do one, every solution, every problem in the world is going to be that one.
What they have, that's right.
You've got to be able to actually.
Ken Fisher's a good example of that. Did I say that out loud?
To do both,
that's right.
then you could say, well, you have the option. You can do stocks, you can do annuities, you can do whatever you want.
Right.
But I'll show you the pros and cons of each direction. And so that's what I think is the only way to get close to an objective opinion is having somebody licensed, qualified, and most important, they have to get compensated on all areas. So let's say they're licensed on both, but they're only compensated on one. Well, that's not going to be objective anyway because they're going to give you the advice on the one they're compensated on.
And if you want to find out, using both, using stocks and using annuities, how long your money is going to last, what your income needs are going to be in retirement, call us. It's something we do all the time. It's very easy for us to show you how to do that.
972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
All right, we're back. I'm just going to mention one last thing about staying away from investment scams. The most popular ones now, and the popular ones like, when the internet's hot, it's internet stuff, blah, blah, blah.
Sure.
Hottest ones now are real estate related. We're going to give you some New York real estate, some Cincinnati real estate, LA real estate, whatever. A lot of them are real estate, property flipping scams, hard money lending. There's a lot of that crazy lending stuff. Oh, no, you're doing a bridge loan for this particular person. They're going to pay you 8%. Always remember, when they do that, it's weird. If I was a big developer, right?
Yep.
And I need to get a project done, why would I pay twice what the going rate is, right?
Because you had to.
That's right. And why would I go through investors when I can get one bank to do it and sign over and do it, right? Because you had to. It's like loaning somebody money. It has a terrible credit. When they bring up private offerings, private real estate deals, they don't get it from a bank for a reason, right? Because the interest rate's too high, or they can't get it. They don't have enough collateral. There's not enough financials backing it. So they go to the private market, and they'll pump it up and tell you, oh, my gosh, this person's a PhD. You wouldn't believe how many things he's built, blah, blah, blah. And he can get it at the bank for half price. He's not paying you 8%.
And 99.9% of any investment that begins with the preface private means that there's usually no market. If you have to get out, you can't get out.
Right.
A couple of things. One thing that makes all of these scams, bad investments, risky investments, omission, all of this stuff work is they trigger our greed button. You know, we get a little greedy. Everyone wants a good rate of return, and then you got guarantees, and all of a sudden you start ignoring the flags of there's nothing completely guaranteed. I can't get 7 or 8% guaranteed. I can get 9% return on this private REIT, real estate investment trust, and get my money out with a profit in 5 years. All the things that we know really shouldn't be true. And we're all guilty of it in one way or another, different times in our life. But just remember, if they're trying to trigger your greed button, don't let them.
Well, I've got a client that just called me 2 weeks ago, whatever, 80 years old, wonderful woman, a widow.
Right.
Husband passed away. And somebody tried to call her. She's got CDs, money markets, a couple fixed annuity, one fixed annuity.
Right.
He said, "Oh my gosh, you need to get out of that stuff. That's not even safe. You need to do this private real estate deal is the only thing safe."
Sure.
And I was like, "Oh my gosh!" So they are preying on people.
Did she come to you before doing it or after?
She didn't do it.
Good.
She called me first.
Yep.
She goes, "I trust you. I call you first." I go, but her husband held the finances most of the time, and so they prey on it. And like I said, tell you that a CD is not safe. Interest is the thing on a CD. You might not pay that much interest, but it's safe. Up to limits and all that stuff. But they're safe. Fixed annuities are safe.
And a lot of things, aren't really scams, but it ain't good.
Right.
You use improper English, like the gold thing. They give you the impression that it's secured because it's gold.
Right.
And the truth knows that stuff is very volatile. It fluctuates. Right. You can lose your shorts in a short period of time.
Have a secure investment like gold. It's not secure.
Exactly. I was just going to mention that radio commercial that said, and your money is, or your investment is secured.
Gold. I've seen that thing go 3,800 back and forth, all over the place.
Yep.
All right,
and the life settlements was another one.
Oh, yeah.
That, they could have had the best intentions. They were viaticals.
Right.
And then they changed them to life settlements. It sounded good. It was a good pitch. Right. And it got a lot of people. It was just very risky, and probably not all the truth was told.
Every once in a while, you'll find a licensed individual that does those kind of private things, and you got to be careful.
They get sold too sometimes,
That's right. They get greedy, or they fall to the ether of the sales pitch or whatever.
That's
they
right.
believe it themselves.
And they get greedy too because they probably get paid a lot, right?
90% of legitimate advisors don't sell private anything. I'm just telling you that now.
Yeah.
It just doesn't happen. But there is about 5 or 10% that do, and to me, they're subject now instead of, I'm confirming something like, well, why would they do that? It's more commission typically.
Yep.
Or they'll give them part of the deal and their commission. So there's no reason. There's enough money in this business to do it 100% legit at all times. But a lot of them are weaker kind of, producers, and they're just trying to make an extra $100,000 or something like that. But that's on the back of poor, unsuspecting people. Well, let's go over questions.
We got time before the break?
Yeah, we can go over 1 or 2 questions before we start. These are questions that came to us by customers, people that listen to our radio show, all that kind of stuff. So we'll start these questions. The rest of the show we'll be doing questions. If you have any questions, don't hesitate to call us. Go ahead.
Call us, send them in, etc. Yeah. All right. An advisor called me and informed me about the annuity stealth tax. Are you familiar with it?
Ooh, annuity stealth tax.
Sounds like a new term to me.
Sounds terrible, doesn't it?
It's terrible. Stealth.
There is no such thing as an annuity stealth tax. It is.
Someone came up with their own nomenclature, didn't they?
Yes, they came up with their own nomenclature trying to sell you either a private investment or stocks or something like that.
Yeah.
There's no difference in taxation. Annuities are interest-bearing, fixed annuities, right?
Right.
They're interest-bearing. So are CDs, so are bonds, so are money markets. All fixed products that produce interest are taxed at ordinary income tax rates. There's no stealth tax rate. There's no stealth bomb. There's no... And what they'll do is LIFO, life at last in, first out kind of calculation.
Right.
We'll finish this after the break.
Back, yeah.
Remember, if you have any financial questions, don't hesitate to call us at 972-715-2424. We got a break coming up. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, the home of plain-spoken, no-nonsense answers to your financial questions.
Welcome back to the show. We'll finish up. The first question today and this week was, what is the
stealth annuity tax?
Yeah, annuity stealth tax or something.
Yeah.
There is zero such thing as an annuity stealth tax. There's also, I heard Ken Fisher's ad saying that they have terrible tax problems. Fixed annuities have the exact same taxes as every other interest-bearing instrument in the world.
Now here's
CDs, money markets, it's all the same.
Here's a twist to
Bonds.
that, and it's very, very easy. And I consider annuities to be a lot like a combination. If you had an IRA and a trust run into each other, because they have similarities to both creditor protection, like a trust does, and it's tax deferred for your non-qualified, your non-IRA money. So what the IRS did is they allowed you to grow your money tax deferred in this vehicle. But they also impose a 10% penalty. It's not a tax, but it's a penalty if you start withdrawing before you're 59 and a half because you had it deferred. Now, here's the deal, and we've talked about it in several segments of the show, and hopefully we can impress it upon you. If you're working with someone that's both securities licensed and insurance licensed, they will tell you the pros and cons on both and see what best fits your needs.
There are no tax problems with it. It's just like saying there's a tax problem with a CD. It's just, or a bond.
Right.
Any interest earned anywhere except for municipal bonds
Right.
are ordinary income tax. Now, what they're saying is, well, if you do everything in stocks, which we can show you a sequence of returns calculator that will prove beyond a shadow of a doubt.
It is awesome.
You cannot put, and I'll show you. We
very cool.
Welcome that to anybody. That it doesn't matter. You cannot put everything in stocks if you're taking money out. You cannot. You can go broke. But if you did that, you've got long-term capital gains if you hold any positions over a year. The one thing people don't realize a lot of times when you have a mutual fund, they spit out long and short capital gains all because they sell stocks.
Yeah,
right?
it's more convoluted, the return.
Right. And so there is a better tax thing. So if you're willing to risk your money, you could get a little bit better tax break. But anything that's interest-bearing, anything is taxable. It doesn't. There's no stealth tax. That's made up. I can't stand when people make up stuff, and it scares people too.
And I'll put a little plug in for our managed money, which is with Fidelity. We use ETFs for cost and for different things, and they're different indices. And one of the benefits in having an index in there, and we'll talk, let's say it was the S&P 500, it's not trading in and out all the time. The only time a position really changes is if someone gets delisted and it's replaced with another one. It's an automatic deal. So you don't have that tax issue as much, and you don't have the expenses, and there's a lot of good things that can happen for you.
When you're in a real managed account, not a wrap account.
Right.
Wrap account was the way to get brokers, which are not registered investment advisors, fiduciaries, to get a fee, annual fee.
Yep.
Is they don't charge you for transactions. If the manager thinks he needs to trade 10 times a day, he can trade 10 times a day. It doesn't cost you anything.
That's right.
He makes more if you make more. He makes less if you make less. It's a percentage of your assets under management. Trading doesn't matter. And so, don't get me wrong, trading matters, but in the context of cost, it does not.
Remember in the old days with the beginning of managed money and stuff, they'd ask whether it was better to have a fee or transaction, and the standard issue answer was, well, it depends if you're going to buy and hold or if you're going to trade the account, right?
Right.
It would dictate which way you'd have to go.
Right.
You ready for another question, or you got a few more scams?
Just one more thing. Remember the wrap account is a way a broker that's not a fiduciary can get a 1% fee a year, 1.5% or whatever. There's another way they can do it, and it's called a C-share mutual fund. It charges you a 12b1 fee of 1% on top of the fund charges. So if you've got fund charges on one, it's charging another one.
It's
right?
piling on.
And that's how another one, because brokers, advisors like that consistency of income, like 1% a year, stuff like that. But if they're not licensed to get it, they got to go through these other means. I've never seen one that I'm sure there could be.
Right.
But I've never seen one that a RIA like us does versus
fiduciary,
a retail broker doing the same kind of thing that actually was better. It just cost more, and it was not better. And they were limited so much on what they could do when the RIA was not. And like I said, you're working for a fiduciary or something that is, if you're suitable. Now, if you graduated the 12th grade and you're not a moron, you're probably suitable. And you're not giving them your last
either by
penny.
income or you can do it a couple ways.
And if you make $200,000 a year worth over $1 million, now you're accredited. Now they can do whatever they want to you. They don't have to be on your interest or anything. You're a accredited investor. I can give you a one-page business plan and screw your eyes out. That's how bad that stuff is.
And they still can take up to 35 non-accredited investors.
That's right.
So they got a way to get you in either way.
That's why private investment's no good.
There's only a little bit here to a break. I've been looking at like 4 pages of scams you've got in front of you. Did we cover the important ones?
I spent 2 segments on scams, so.
All right, we covered the important ones?
Yeah. What's the next question?
All right. My Edwards Jones who typed this out? Edwards Jones recommended a blend of American funds for us. The funds look pretty good. Is there anything I should know before I move forward?
Edward Jones is weird with the American funds. I think they're the biggest distributor of American funds in the world.
They've got a sales agreement with them, I'm thinking.
I'm guessing.
Yeah, just a thought.
I'm not there's some, like American Funds, Euro Pacific Growth, it's the largest international fund, or it was, for many, many years.
Right.
I like it. But I can't imagine every single one of their funds for every single asset class. That's number one. Plus, sometimes you're getting the fees on some of those, depending on the A, B, C share or what share class can get kind of nasty. Plus, if you have over, say, $300,000, you should be paying commissions, and those are commissioned. American funds are commissioned products. So if it's $10,000, they're getting 5% every time they trade the dang thing. Now you can't trade within American funds and not pay it again, but that's a nasty thing where you got to trade a commission plus 1% a year, 1.5% a year. So you got to be real careful with that stuff.
Yep.
Fees matter. Paying too many fees will never work out for one side of the table.
That comes off right at the top.
Think about it. You're taking 5% off the top and 1.5% a year. It will not work.
And then the market goes down 20.
That's right. Then it goes down 20. You lost 25, right? So it never works. Never pay high fees. Never, never, never. We got a break coming up, folks. Don't hesitate to call us if you have any financial questions. 972-715-2424. Stay with us. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Welcome back to the show. I just heard, Guy, that Hawaii is eliminating all plastic everything, straws, forks, everything plastic.
I've got mixed emotions about that. I've seen pictures of these huge islands out in the ocean,
plastic, right?
And that stuff just never ever biodegrades, right? So
no. Well, I'll tell you what. Have you ever sucked on a paper straw?
Oh, they collapse on you, don't they?
Yeah, you get like one good sip.
After a few
now
minutes.
I'm sucking on cardboard. So it's
That's
plastic.
true.
I mean, everything. Think about it. Every syringe, everything else. It's all plastic. Everything's made of plastic nowadays.
Just think about that. All that stuff is by some careless blankety blank that just tossed it. If everyone would just recycle and do the right thing, they wouldn't have any problems.
That's like all plastic. Like the plastic bottles, like for Cokes and stuff like that.
Yeah.
I do think it tastes better in glass.
Holy
moly, they always go overboard with this stuff.
My favorite is, was it de Blasio that was going to, or was it, I think it was de Blasio that was going to tax if you had a drink over 12 ounces or something. If you had a 20-ounce drink or a 35-ounce drink, you were going to get a soda pop tax.
What'd you see? Like California said they're going to, they get illegal aliens driver's license. And then they said, well, if you have a driver's license, you can vote.
Oh, yeah.
It's like, come on.
Well, yeah, they didn't want any IDs. Oh, let's not get down that way. You ready for another question?
Yep.
All right. This is a long one. Let me see if I can get through it. I'm 50 years old, and I have $2,000 per month I can save. My friend has $2,000 a month, but he takes $1,000 and puts it into his 401k and the other $1,000 into a brokerage account. His thoughts are that he doesn't have to lock in half of his savings and has access to it. In other words, putting it all in he's afraid to put all of his money, I think, in his 401k because it's locked up and he can't use it for emergencies. What do you think?
I mean, it's an okay plan. Mathematically, you can never beat a 401k. You can't, because it's tax deductible and tax deferred, and you got possible matches and all that. It's impossible. So the same investment will return a lot more in a 401k than it would outside. Having it locked up is not always a bad thing.
I know, that's right.
You think about it in your lifetime, if you'd had something locked up, maybe you didn't make that one stupid mistake, that one extra Harley you had to have, whatever. So it's not always a bad thing to have things a little bit further reach. Why do we even have savings accounts anymore? A checking account pays interest. You can get an interest-bearing checking.
Sure.
It's the same BS 0.1%.
Remember the old passbooks where they'd handwrite in your deposits?
Well, people still do it, I think, because it's just a little bit extra to get to, even though now you go online and transfer everything everywhere.
Let me lay this on the fellow or gal that wrote the question in. If you think about our bucket strategy, the 3 buckets, right? Your savings, your liquidity, your income, and then the stock market. We always said you do them in that order, and each one kind of dictates what you should have. The first one, a year or so, give or take, for expenses. The second one, based on how much income you're going to need in retirement, which is ideal for that 401k you're asking about. And then the third one is the stock market, which is the hedge for inflation, which you need to have. So if you take care of that emergency bucket first, whatever that number is, and that's put away, you don't have to worry about dividing your money. You've taken care of the emergency money. It's handled. Now max out your 401k or IRA.
If you've got a year's worth of expenses in cash, you don't need to be splitting up. Take the full $2,000, do the 401k. Now remember, think about this. We're financial advisors. We want your business. That's what we do this for.
We want to earn your business.
Right. But we can't make money when you put money in a 401k. And we're telling you that's the very first thing you should do is put it in cash, which we can't make money on. And then next is a 401k.
Max it out.
Which we can't make money on because it's logically the only thing you should do. I hear advisors all the time saying, no, don't put in that 401k. They got like 4 choices. Ooh, they're only matching 3%. Oh, those crooked companies. Don't put it over. You didn't put it in my deal over here. You didn't invest with me. A lot of life insurance guys will do that. No, don't do those 401ks. Put it in those life insurance policies.
Life is the answer to all.
That's right. Guys. It's the answer for everything.
That's right.
And that's all BS. Don't do it. Don't listen to it. So if you can max out a 401k, we've been doing this a long time. Between the two of us, 70 years or something, right?
Oh.
Long time. The people that max out those 401ks end up with more money. What you say, 90% of the time, you think? Been doing that forever?
Yeah,
90%. It's that much difference. I've got doctors that make $800,000 a year that save less than an engineer making $120 because they think that 401k is always boom, boom, boom.
And that's not one instance. If you're listening to that, say that again. That's time in and time again, over and over that happens.
Oh, yeah. Now, don't get me wrong. There's some very smart doctors, and some of them will have a whole lot too.
Oh yeah, absolutely. But the pitfall that happens to people that have large incomes is they feel it's never going to stop. They're always going to have it. And you know what? It can stop.
I tried to get my kids to be a doctor or something. And
they wouldn't do it. They wouldn't follow your footsteps, one, right?
The first one wants to be an artist. And the other one said, oh, no, I want to be what they want to do, I want to babysit dogs. I'm like, oh, there's nothing wrong with that. It's noble. But no engineer, no doctor, no nothing. Okay.
You got a professor with 160 IQ. That's not bad.
I do have a professor. But he's been offered jobs, everything else in Silicon Valley. Doesn't believe in money. That's evil.
I know.
That's evil capitalism.
There you go.
I was like, evil capitalism paid for your 9 years of college. It was okay then, but not now.
Apparently so.
And so, remember.
You're just praying, I got to say. Yeah. You're just praying he has kids, right? So that you can say, I told you so.
I know. He'll move to the burbs. He would never live in the burbs.
Right?
I know. Remember, we developed this show decades ago to answer your financial questions. We provide no cost, no obligation portfolio reviews, retirement plans, Social Security optimizers, or just like I said, any kind of financial question. Call us at 972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. I'm Victor McClure. For Guy Allert, we always appreciate your time.
The preceding show is paid for by McClure Capital and is for informational purposes only and not a solicitation or representation of any particular investment product or service. Any views and opinions do not constitute financial, legal, or tax advice. Consult with your appropriate professionals before making any investment or savings decisions. Always consider your risk tolerance, time horizon, and objectives in making any financial decisions. There is never any guarantee of future success or performance.